All right, so it's the end of the year, and I just want to do a bit of a review, see where I've come. I started trading and selling options this year. I think it was in March when I started. It's kind of messing around, wasn't really tracking things very well, but I started tracking things better in this spreadsheet here. So, like in October, started tracking my trades a little better, and you can see I've collected like 325 in October, 445.97 in November, and so far in December 443. And the return rate here is like 2.4, 3.0, 3.9. So if I take that percentage, let's say it's conservatively like 2.5% times 12. That's like 30% per year. So I don't know that I'll make that. I'll make mistakes, I'm sure. So I'll be more conservative in my estimations, but hopefully I want to make like at least 20% per year as a return on my capital. And learned a lot and kind of getting things on track now. So right now my account balance stands at 28,860. That's fluctuated a little bit. It fluctuates based on, the current value of like my holdings that I do have. I've got some shares of O, and I've got some shares of SCHD and some JEPQ. So this fluctuates a little bit. But overall, last I checked on my spreadsheet, my portfolio value was like 29,052. So let's call it 29,000. And my total contributions into this account this year were 26,880. So if I calculate the difference, 29,000 minus 26,880, I got some gains of like 2120. So if I divide that by my contributions, 26,880, that's about 7.8% return. That's pretty good, considering in my learning process, I've actually had a couple losses where I made an investment and I was doing cash secured puts and covered calls on Lee Auto, and I bought at like 42, and it just tanked from there on out. From like 42, bought it like 42, but it's just gone down since then. Looks like it went up to 40 or so, but I kind of got tired of selling cover calls against it to try to get some income back, but I just got tired of it because I had a lot of capital tied up and just sold it at a loss. So I learned a lesson there. Sometimes you win, sometimes you lose, and that's just part of the learning process. So this percentage could maybe be up higher, maybe about 10 or 12%. I'm not sure, but my goal is to make like 20% per year on my account balance. So I'm gonna keep adding to it, like $1,500 a month as I go. And so I'm just calculating my plan, my beginning balance. Let's say this is today's balance. So let's say year one, and I want to make 20%. So at the end of this next year, this will be equals this times 1.2. And then if I add to it $1,500 a month, which is, was it 18,000? 1,500 times 12. 18,000. So then that equals sum of these. Equals sum. So by the end of next year, I'm hoping to have this as my balance. Year two should be equals this times 1.2, 20% return plus 18,000. And then this will equal the sum of those. And in 5 years, let's see what I get in 5 years. So at the end of 5 years, I'll hopefully be working with this amount. I'm really enjoying this, and it's a great way to make passive income, and it's fun to do. So, sorry, my voice is scratchy because I've been sick, but I'm considering, I've got some real estate, and I've got a paid off condo. I'm considering selling that, or I could add to this about 300,000. So if I had like 500,000 to work with, I could probably make, pretty good, decent side income off that, and reduce my expenses and retire. So my plan is to maybe in the next few years retire. It's hard to justify selling a paid off condo, which makes money on rentals, but I think I can make more with these covered calls and cash secured puts, and then I don't have any tenant headaches, I don't have any repairs, don't have any risk, and just I'm at the age where I want to set my mind at ease. And so instead of buying real estate, I want to invest in things like and other REITs where I don't have to bother with the management, and I can just make money off the real estate, after good funds. So that's kind of my thought process there. My overall plan is to take part of my earnings and invest into dividend-paying stocks, and I want to invest into Dividend Kings, and Dividend Kings are stocks that have paid a dividend for 50 years, and the dividend has grown 50 years. Dividend Kings and Aristocrats. If you look at, you can just search out Dividend Kings. Here's like a current list of Dividend Kings for 2023. All these are good, solid, quality companies that pay a solid dividend, and they've been doing it for over 50 years. So my overall plan is to just keep investing in these big, solid companies. And I'm going to do 100 shares at a time. I've currently got 100 shares of which is a REIT. It's not really a Dividend King. I'm not sure, it might be, but SCHD is an ETF. So I'm going to invest in ETFs, Dividend Kings, and Dividend Aristocrats. But I'm going to stack them up like 100 shares at a time, so then I can do covered calls against those and do the wheel strategy on those and have that be another source of income. That'll be more steady. Right now I'm doing like AI companies and companies that are a little more volatile, a little more risky, but they've got a little bit better returns, but you also run the risk of losing trades too. So you got to be very careful. Try to keep my deltas between 20 and 25. Sometimes I go up to delta 30, but that's kind of my overall plan. And also I'm going to be investing in VTI is like the equivalent of STSAX, which is an index fund, the Vanguard total index fund. So that's the slow and steady. I'm going to be putting as much money as I can into here. I've got a limit order on here. I'm just starting, so I've got a limit order out to buy this, and I'm going to keep investing in this over time. The real simple path to wealth is to just really invest in the Vanguard index funds and just set it and forget it. But it's fun for me to kind of build a portfolio and learn about stocks and play with that on the side. I think majority of my investing is going to be in index funds, and but I'm going to be playing with these other things too. So that's kind of my thought process. I'm in the middle of the year end, setting my goals for next year. I'm going to write all this down. So my goal is to grow this small account by 20% on the balance, add $1,500 a month to it, and then grow that each year. Possibly sell some real estate and put a big chunk into this and do covered calls and cash secured puts on part of that. I'll be investing in solid, safe index funds, which has a track record of increasing. I think it's like 11% per year. And that's a no-brainer. And then some of the other funds that I make out this, I will be stacking up into Dividend Kings and Dividend Aristocrat stocks that are good, solid companies that are probably not going to go away, and they always have a good return. Again, Kings have had a dividend. They've provided a dividend for over 50 years. Aristocrats have provided a dividend for over 20 years. So those are good, solid companies. I'm learning how to do research on them and pick the best ones for me. And I'm going to be getting a mix of all the different sectors, so it's kind of safe and spread out from real estate, utilities, industrials, consumer goods, and energy, things like that. So it's good to spread things out. So that's it for now. I just wanted to put this video out in my thought process. I'm not a financial advisor. I'm just putting my thoughts out here and sharing my journey. So if you are enjoying this, I hope you'll hit the like button and subscribe and if you got any suggestions, you want to see me do anything, let me know. I'll be happy to take your suggestions and research it and put it out on my YouTube channel. And again, sorry for my voice. It's I got sick this year, and my vocal cords are messed up, so I'm healing from that. But I really love this. It's a great way to, I work a day job, and so it's a great way to kind of like run your own business where you're just pushing buttons and hopefully making money. You got to play things smart, but there's no inventory, there's no customers, there's no clients, there's no real estate or rent you got to pay for. You can just start this business and run it on the side. I set up these options like once a week. I usually do weekly options, and then I set it and forget it. And each week I just kind of roll them or let them expire or let them get assigned, and then I just do the wheel strategy on that, and just keep going from there. So if you don't know what the wheel strategy is, basically, if you don't have any stocks, you can sell cash secured put options, and you can make a premium on that. And if you don't get assigned the shares, then you can just repeat that and keep making the premium. If you do have to buy the shares, then you will sell covered calls against them, and you get to collect the premium there. And if your shares don't get called away, you just do it again and you make the premium and repeat the process. If your shares do get called away, and you just go back to cash secured puts. So that's my strategy on building this small account long term. I'm gonna get like a basket or hand basket full of stocks that I really like to trade in, that provide good premium and that are not too volatile, and it's safe. What I really like about options is that you can control your risk. Let's say I want to trade QQQ. Down here, I actually got to sell a put here. That's what I need to look at. Change my expiration. Let's go to January. Click the price. So if I'm at the money here, this delta is like 0.47. But if I go down, I get less premium the more you go like away from the money. And so this delta is like 31. You can consider that a 31% chance that you're going to win this trade and not be assigned. And you can just do it again. So all you do is collect the premium. You won't have to buy the shares. If I go a little lower, this delta is 19. So it's like a 20% chance that you're going to lose this trade, which means you got about an 80% chance of winning the trade. And the option buyer is actually got an 80% chance he's going to lose that trade. So it's better to be the seller. That's kind of my thought process there. My plan is to have deltas between like 20 and 25 to be safe. Sometimes if I don't mind owning the stock and I just want to get it at a little bit of a discount, I might go up to a higher delta, like 30 or 40. But to stay safe, then I'll just keep my thresholds between 20 and 25 as the delta. Hope I'm not rambling too much. Still just kind of learning all this. Again, if you like this video, get some value out of it, hit the like button, and we'll see you on the next one. Thanks for watching. Bye.